You've held off on all that, but in fact, way back in 2002, when your book, Rich Dad's Prophecy, came out, you foretold in that book that 2016, this year that we're in right now, would be the year that the market would begin to implode. And you gave a very specific reason. Would you explain that to the audience, why you believe it's very possible that this year could be the very beginning of the worst market crash in world history?
Well, my prediction really began back around 1980 when I understood what the 401k or the ERISA plan was. So ERISA stands for Employee Retirement Income Security Act. And, you know, every time the government says something, you know you're about to get screwed. So they say income security, retirement income security. I smelled a rat, and my rich dad started talking to me about it, and he says there's a flaw in the system. And the flaw in the system is that the workers put their money into Wall Street, and Wall Street makes trillions off of it. And then in 2016, the baby boomers, the luckiest generation in history, they have to take their 401ks and withdraw by law. So I base my prediction based upon not fiction but facts in the law. So this year, the first baby boomers are required by law at turning 70 and a half, they must start withdrawing. And as you know, the stock market is basically a Ponzi scheme where it needs money coming in to fund money going out. So just do the math. There's approximately 70 million baby boomers, 56 million have 401ks, and they're starting to withdraw this year. So can the market keep going up? They'll have to keep finding new people coming in. Plus there's 1,000 other reasons why it's going to come down, but I just based Rich Dad's Prophecy, which came out in 2002, is just based upon the flaw in the 401k system.
At 70 and a half, the participant must begin withdrawing unless he faces tax consequences. When they pull the money out, Robert, I guess some might argue that they'll take the money and, of course, just go back and consume in the greater economy, and that may help the earnings. I guess it could counterbalance. But in the end, I guess the net loss of the propping up of these stocks will actually be more detrimental than anything else.
What I didn't see was how aggressively the Fed and the Treasury would go into quantitative easing. And that was, today, you know, you and I know is called the Greenspan put, that no matter what happens, the Fed and the Treasury will keep the stock market propped up. And that was, had no idea how desperate they would get, and they're pretty desperate.
They are, and as you pointed out in your books over and over again, money is an illusion. You mentioned earlier silver is money. This paper currency that we have today in no way, shape, or form is money in the traditional sense.
Well, let me just say it this way. The real problem is the mantra in people's heads. So the people listening right now, how many of you still believe in going to school, getting a job, working hard, paying taxes, saving money, buying a house, getting out of debt, and investing for the long term in the stock market? That's the problem. You see, why would you save money when they're printing money? Why would you save money when there was ZIRP for a number of years, zero interest rate? Now there's NIRP, and people are still saving money. You got to be crazy. You've got to be crazy.
Mm-hmm.
But no, I'm saving money. I go, are you nuts? And I argue with these people. You know, I've given up arguing. You guys are idiots. You can't even think. They're printing money. Why would you save money? Oh, no, I've got to save money. That's the problem.
You're listening to the voice of Robert Kiyosaki, the author of Rich Dad, Poor Dad, and many, many other books, including his latest entitled Second Chance, a very good book, very well reviewed. Second Chance for Your Money, Your Life, and Our World, where he gets in and talks about the present, the past, and the future on how you can prepare for what lies ahead. Robert, let's talk about you. Let's talk about last time we talked to you, of course, you've always been big in real estate. You like to invest. Also, you mentioned oil and gas that you had. Of course, that's been hit pretty hard lately. You know, as you look at the stock market and you say, you know, it looks like it's going down in the future, how do you hedge? What do you do, especially with money, the way that it is, the currency and the stock market? How is the Kiyosaki household preparing for the next decade?
Well, one of the reasons I invest in real estate, because I like real estate, but it's debt. You know, who else? So I just borrowed with my partner $300 million last year at 3% interest. At the same time, the village idiots who went to college are avoiding debt. See, money is debt. You and I know that. Money is only created when you buy a bond. when a bond is created. So the whole banking system has savers on, I covered this in Second Chance, has savers on one side and debtors on the other side. The world economy needs people who can borrow large quantities of money. So I am richer and richer because I'm a debtor. Meanwhile, the savers are getting ripped off. That is the financial system. And the average person cannot hear it because their brains have been hardwired to saving money and getting out of debt. So I love real estate because when I go to my banker and I say I have, we had $500 million, $500 million in property to refinance, they gave us $300 million of it. And that $300 million is tax-free. You think about that, and you're saving money and trying to get out of debt, you wonder why the rich are getting richer. And it's because our schools have brainwashed us into thinking that saving money is smart and getting out of debt is smart, when it's opposite. Getting into debt and not saving money is smart.
That is so counterintuitive.
I save gold and silver. Physical gold and silver, no ETFs, because that's a derivative product also. ETFs are as phony as they come, and I don't trust them. So I have hard gold and silver stored in mountainside vaults that nobody knows about.
There you go. So you have gold and silver, you have real estate, of course. What else besides those two asset classes? What else do you like?
Well, oil is taxes. When I invest $1 million in oil, I get an $800,000 tax break day one. Try getting that with a mutual fund. You see, the rich are getting richer because they're smarter. They're not in school, though. So when I have a tax bill coming up from my businesses, my profits, I simply call my real estate, my oil and gas guys. I got $1 million to place. He places, I get $800,000 back in taxes. It's called phantom cash flow. That's how the game is played. And every time I talk to, people who went to college, who go, that's illegal. I say, no, going to school is illegal. Because they don't teach you this stuff.
Mm-hmm.
Not that hard, they just place your money. The tax system is based upon incentives. It's not, I'm cheating the system. There are legal loopholes. The government wants me to buy real estate to provide housing, so they give me tax breaks. It's called depreciation. The government wants me to use debt, so they give me tax-free money. The government wants me to finance the oil industry to keep low-price oil, so they give me tax breaks for investing in oil. But they don't give me tax breaks for buying stocks in oil companies. It's really interesting.
So the person who's listening out there, Robert, who is working a job, maybe you've identified somebody by what you've said. He's working that job. He's gone to school. He's been saving paper currency. He is investing in those oil stocks. He's doing everything that he knows to get ahead, and he's just not. He's on the hamster wheel, and he can't get off. Talk to him for a minute. What does he need to do? Well,
I was a student of a man. It's covered in a book, Second Chance, of Dr. R. Buckminster Fuller. And he was considered one of the greatest geniuses of our times. And he said the most powerful tools ever created was the spoken word. And he said words are tools. So if you've been taught to save money, you better question that word save. Until you question it, you will do as you're told. And when you save money, you just give the money to the banking cartel known as the Fed. And the Fed doesn't really need your money. They need debtors. So the reason I get rich is not because I'm a saver, but I learned to borrow. I get into debt. Now there's consumer debt, which is college loans, credit cards, and car loans. And then there's investor debt, which is called mortgages. And as your mortgages brought down the system in 2008. So anyway, it's really an interesting time, but it's a lack of financial education in our schools. They're all like my poor dad. So that's really the challenge, and that's why I'm always happy to be a guest on Follow the Money, because you got to follow the tax dollars is really what it is.
Right.
The rich understand taxes. Poor middle class pay taxes.
It's very, very, very eye-opening and very different thinking. Obviously, it's renegade thinking. That's what's required in this kind of environment. When you live in a debt-based economy, then your quote-unquote money is not really money, it's debt. And that is exactly what our guest is saying. And I know it's hard for some people. Of course, on this broadcast, you hear me talk about that all the time. But it's still hard to swallow, isn't it? The concept that money itself is debt. It is debt. If you look at the very top of a dollar bill, it says Federal Reserve note, That means that it's a note just like a car note. It is owed back to the Federal Reserve plus interest, and they get to set the interest rate. So it is a scam. We totally agree, Robert.
Well, it's a scam for the poor and middle class. For me personally, I love the system. And that's why I write and I speak to guys like you. Because let's say I have 10 listeners right now. I doubt if 2 do anything different. Because it's hard to, because it's in your head already. I got to save money, get out of debt, buy a house, invest for long term in the stock market. Unless that is changed, nothing changes. The words, from the Bible, the words became flesh and dwelt amongst us. Words make people poor, middle class, or rich. Unless you can have the temerity and the courage and the diligence to change your words, nothing's going to change.
One of the things you talk about also, Robert, over and over again, and I've been meaning to ask you this, I meant to ask you the last time you were on, is you talk about the necessity to find a mentor. Let's think about somebody who's young, just coming out of college. They're just getting started. They don't have a lot of advantages, and they need to find a mentor. What do they do? How do they find a mentor? What's the best way to do it?
I think the best way is to read a book, but not that garbage you put in school. So I learned by reading books. I'm not a very good reader. I'm never been a good student. But, as to say, when the student is ready, the teacher will appear. So, I've been cruising when Borders was around, bookstore. Many books just popped up in front of me. My friends would send me a book, and I'd read it. The Creature from Jekyll Island is, I think, must read for anybody who wants to understand the Federal Reserve System. And that's written by J. Edward Griffin, who we had a guest on your show.
Yeah, he's been on. Yeah, he's been on quite a few times, and in fact, the last time he was on, we were talking about that petrodollar article series. He actually read that and gave us a glowing review. He's one of those guys who has been talking about this for a long time. There are a lot of great guys. You're right. There's the book Creature from Jekyll Island. You of course have a tremendous number of books as well that can wake up the masses. So if they're looking for a mentor, pick up a book. How can they find somebody? Of course, you gravitated towards some people. Of course, Buckingham Fuller, you had mentioned earlier. Also, your rich dad. That was very fortunate. But what about somebody who wants to take it the next step? I mean, do you recommend them going out and networking? How do you judge whether a mentor is good? Obviously, he has more money than you. That would be a good step. But what if he's learned all the wrong things and he's done it that way? How do you find your kind of guy? How do you find the smart person?
Planners? You mean financial planners and real estate brokers and stock brokers? What I'm saying to you is, if you call G. Edward Griffin up, he's going to give you, hello, bye. That's it. If you want to understand G. Edward Griffin and be a mentor, I'd buy A Creature from Jekyll Island and read it.
There you go.
And then what you're better able to do is know who you should be talking to. But if you call, Ben Bernanke, who's one of the biggest criminals of our time, did you read David Stockman's book, The Great Deformation?
Oh, sure. Great book.
He lists Bernanke as one of the biggest criminals of our time, and Nixon, and FDR. And those are the guys that the masses listen to. That's the problem. So if you want to, and when Bernanke wrote his book, The Courage to Act, that was cover-up, justification for him ripping off millions of people, billions of people. So if you like that guy, go read his book and study him. But there's guys like Stockman, who was Reagan's budget director. He saw it from the inside. So I would read The Great Deformation and then The Creature from Jekyll Island. If you're a reader, those are tough books. But at that point, you have to open your eyes up first inside your head, and then you can seek new teachers. But otherwise, you'll probably run into a college professor like Bernanke, and then you'll get screwed. That's what happens. That's why I kind of, like there's an old Irish proverb that goes, if I knew where I was going to die, I wouldn't go there.
Right.
And I died in school. I don't go back there anymore. I was told to get a job, work hard, save money, invest long-term in the stock market, get out of debt, and work for money. That's why I don't like going back to school. Now, it's good if you want to be an employee and go broke. School's excellent. Anyway, it's really that. You have to open up your mind first to change the words in your head and seek great thinkers. And Edward Griffin and Stockman are incredible. The other guys are, guys like Richard Duncan, who wrote The Dollar Crisis.
That was a great book.
They're tough books to read.
They are.
If you don't read them, then you may as well just go to college and read an economics book.
That's right.
You get lied to. Every time I talk to an academic, which I really, I don't blame them. They're a product of the system. But many academics, especially economists, they can't survive without a job, like my poor dad. My definition of rich is when you can get rich with or without money, and you don't ever need money again. And most of these guys, like, Obama and all that, they need money. Trump doesn't need money. Bernie needs money. Hillary needs money. So when you look at it that way, who's you going to listen to? Who you want to run the country? So the definition of rich is when you can operate with or without money. When I was a pilot, I flew for the Marine Corps in Vietnam. You knew you were a pilot when you didn't care if you had an engine or not. An engine was on, you could fly. Engine died, you could still fly. That's a pilot. And a rich person doesn't need a paycheck, doesn't need money. So those are kinds of objectives that I put, seeds of wisdom in young people's heads, but most of them go looking for a job right afterwards.
It's so heavily ingrained. It's so heavily ingrained, Robert. It's just...
I don't blame them. It's survival. DNA, I got to have a job, man. I got to have a job. I look at them and they go, you're mean, you're cruel. I said, man, you ain't seen mean and cruel yet, But anyway, I just want to say this, is that if you understand the system, i.e. that Creature from Jekyll Island or The Great Deformation by David Stockman, you'll understand why we're being screwed. Look, the great bailouts, exactly as Stockman and Edward Griffin say, was not to save the economy, it was to save the rich.
There you go. That's right.
All this quantitative easing and all this hullabaloo and TARP and all that was just to save the rich. Griffin says that and Stockman says that. Now, the reason the economy hasn't been saved is because if they do helicopter money like Bernanke suggests, which is giving poor people money, it doesn't save the economy. Because what poor middle-class people do with money, first they'll try and save it. Second, they'll try and pay off bills, which contracts the economy. And third, they'll buy products from Japan and Korea and China. The only way they're going to save the money is they're going to have to give poor middle-class people $1 million and tell them to borrow $5 million. That's how you save the economy. But the average person, poor and middle class, is terrified of getting into debt. That's why it can't be saved. That's why we're going down. They're just going to print money to save the rich. So years and years ago, I decided I'd rather be rich than go down with everybody else. And that's kind of my message I'd like to leave people to think about. TARP, or quantitative easing, bailed out the rich. If Bernanke's helicopter money comes true, it's not going to save the economy. It's going to make the rich richer because the poor will save the money or consume the money in the grocery store. The middle class will pay off debt on what they do with them. They'll pay off bills, and then they'll just consume more products from Korea and China. What we're going to save the economy is to have the poor and middle class borrow money and buy stupid things like more cars and houses, but then they go broke anyway.
Which may explain the negative interest rates, the impetus, the new impetus to borrow.
Yes,
yeah,
you got it.
Yeah.
And the poor and middle class are so terrified of debt. Every time I talk to people, I go, look, when the markets crashed in 2008, by 2010, I had borrowed $300 million. That's from a rich man. And the financial planners and the village idiots just go nuts. Now, I don't blame them for going nuts. I say that to have an effect on them. But they can't hear me because they're so cowardly. They were taught to go to school, save money, and get out of debt. What I'm saying, you want to save the economy, get into debt, you'll pay no tax. It's completely opposite. Is that making sense to you?
Oh, of course. Of course you're making sense to me. I'm thinking about the audience also and realizing that many of them get it. Some of them are probably still scratching their head. That's why they need to buy your book. They need to buy your book, If they've never read Rich Dad, Poor Dad, they certainly need to read it. There they will learn that a house is a liability, not an asset, a very paradigm-shifting concept if you've never even heard that before, if you've never experienced that logic or that thought. It's brought across in Robert's first book, Rich Dad, Poor Dad. Fantastic book.
But also, Rich Dad, Poor Dad, I said the most important thing, the rich don't work for money. You see, I don't have a job, I don't want a job, because the moment I have a job, I've got to pay tax.
That's right. You work for assets.
When I borrow money, I pay no tax. I get rich, which is smarter. But the whole thing here is you want to save the world economy, borrow more money. The trouble is they don't know how to borrow. But they go back to school, and now student loan debt is number one source of income for the U.S. government.
Robert, the only reason what you're saying makes sense is because we are upside down. Isn't that true? Isn't that really true?
It makes sense now because people realize what I'm saying has some validity to it.
Mm-hmm.
You know, back in 1997 when I published Rich Dad, Poor Dad, it was turned down by every editor and publisher.
Sure.
They said, you don't know what you're talking about. But now people kind of realizing, wait a minute, you know, I got to do something different. And it starts with the words in your head, as simple as that. If you think saving money is smart, just look at negative interest rates and ask yourself, why is that? Question it. I'm not saying to get into debt. I'm saying question it. And the reason they want negative interest rates is they need people to borrow money. Because when you borrow money, money is created. There's credit, and the moment you borrow, it becomes debt. And once you understand that, and that's why Creature and Stockman's books, The Great Deformation, are important to read. And if you want a mentor, those are the best mentors you can get right now. Or you can go talk to your financial planner, and they'll tell you to save money and invest for long-term in the stock market.
The average person out there, Robert, who begins to understand and begins to wake up to the economy and sees how topsy-turvy and how upside down things are, they often immediately, well, some of them, if they take action, they often get away from the stock market. They don't want to be long-term in the stock market because they see the writing on the wall. But oftentimes, they go even a further step, and they start fearing that everything will lose value, and they go overboard with gold and silver. And many of them even point to real estate and say, that is a huge bubble. I want to stay clear of real estate, too. You, of course, have a lot of real estate. Are you concerned about real estate in this scenario that we've talked about here? Do you think real estate is a dangerous place to be for the next several decades as all of this begins to work itself out, the system begins to break down? And should new investors, should they move into real estate, take out loans? Do you feel that the problems that face America, that investors in real estate will have some insulation from them, unlike stock investors? Talk about that just for a moment.
It's not real estate, it's education. I take real estate investment courses, stock courses all the time. I'm always educating myself. Am I concerned about real estate going down? Obviously. That's why I study. The village idiot says, oh, Robert Kiyosaki invests in real estate, or Donald Trump has invested in real estate, so I think I'll go and buy an office building in downtown Manhattan. Well, you don't do that. That's who are the stupid people. It's not real estate. It's what you know about real estate. It's how much experience do you have. And I've been doing this since I was a kid. So it's kind of second nature to me, but I still take real estate courses. I still study. I still read books. I'm constantly observing the market. I understand taxes. I understand debt. It's not real estate. And I never would say to somebody, go out and buy real estate. That's, I have family members, oh, you made millions in real estate, so they went and bought some. I said, are you nuts? But they all have college, they have master's degrees and stuff like that. These are my family members. They've never taken a single real estate course. When you hear that, you'll understand my frustration. Most people are idiots when it comes to money. They think it should be easy when it's really a very tough game. So I want the smartest guys, the brightest minds, and a lot of experience, and I invest in my education. Most poor and middle-class people go to school, but they don't invest in their education. If I could leave it with that, Jerry, that's my message. Why would you take courses from poor people? I just don't understand it. Most school teachers are good people, but they're poor people, like my poor dad. So thanks for the time, Jerry.
Hey, sure do appreciate it, Robert.
Thank you. Derivative of having sex.
And your book is a derivative of you.
Yeah.
Yeah, it's a wonderful concept.
It's just that when the derivatives market is, I believe, the biggest market in world history. It's unregulated. I've seen dollar amounts of derivatives, which brought down the subprime mortgage crisis, which subprime mortgages are derivatives. But I saw derivative market has grown from $700 trillion in 2007 to today is 1.4 quadrillion.
No.
And I can't even think about a trillion, much less quadrillion.
No, I know. We're just getting used to millions and billions, aren't we?
We don't know.
Robert, one of the things I really appreciate about you, your work, the things that you've done is you have held the name of financial education highly. you haven't taken your fame and used it to make crazy claims that you couldn't back up. And a lot of people have ruined their name over the last several years as if they've come out and said, okay, the market's definitely going to crash now, or it has to crash here. You've held off on all that, but in fact, way back in 2002, when your book, Rich Dad's Prophecy, came out, you foretold in that book that 2016, this year that we're in right now, would be the year that the market would begin to implode. And you gave a very specific reason. Would you explain that to the audience, why you believe it's very possible that this year could be the very beginning of the worst market crash in world history?
Well, my prediction really began back around 1980 when I understood what the 401k or the ERISA plan was. So ERISA stands for Employee Retirement Income Security Act. And,
let's talk about you. Let's talk about last time we talked to you, of course, you've always been big in real estate. You like to invest. Also, you mentioned oil and gas that you had. Of course, that's been hit pretty hard lately. As you look at the stock market and you say, it looks like it's going down in the future, how do you hedge? What do you do, especially with money, the way that it is, the currency and the stock market? How is the Kiyosaki household preparing for the next decade?
Well, one of the reasons I invest in real estate, because I like real estate, but it's debt. Who else? So I just borrowed with my partner $300 million last year at 3% interest. At the same time, the village idiots who went to college are avoiding debt. See, money is debt. You and I know that. Money is only created when you buy a bond, when a bond is created. So the whole banking system has savers on, I covered this in Second Chance, has savers on one side and debtors on the other side. The world economy needs people who can borrow large quantities of money. So I am richer and richer because I'm a debtor. Meanwhile, the savers are getting ripped off. That is the financial system. And the average person cannot hear it because their brains have been hardwired to saving money and getting out of debt. So I love real estate because when I go to my banker and I say I have, we had $500 million, $500 million in property to refinance, they give us $300 million of it. And that $300 million is tax-free. You think about that, and you're saving money and trying to get out of debt, you wonder why the rich are getting richer. And it's because our schools have brainwashed us into thinking that saving money is smart and getting out of debt is smart, when it's opposite. Getting into debt.
Helping people understand what money really is and how they can take control of that money. He is the best-selling author of the best-selling personal financial book on the planet, Rich Dad, Poor Dad. He wrote it back in 1997, and he self-published the book, believe it or not, before he was finally picked up, and the book, of course, became a wild success. His name is Robert Kiyosaki, and he's here with a shocking prediction that he made 14 years ago. We're going to talk about that in just a moment. Robert, thank you so much for joining us on Follow the Money Radio.
Thank you, Jerry. It's nice talking to sane people.
Well, they're few and far between today. It is a wild ride. As of this recording, by the way, we should state that we are recording this earlier in the week. But silver is up very nicely today. I know that you've been a big silver investor, as I have too. Are you liking what you're seeing on silver right now and gold? What's your take on silver?
All that glitters, I love.
Right.
I just like real money. Gold and silver are the only real money in the world. And the rest is just a derivative, i.e. paper or electronic blip on your screen that can be controlled and manipulated and aberrated at will.
I love how you say that, because I remember in one of your books, you distilled it down so well, because some people get weirded out when people say derivatives, and they think, well, what is that? And you once said that an apple is a derivative of an apple tree. It comes from a tree. And I thought that was brilliant. That makes it so easy for people to understand. A derivative comes from something, but it's not really anything of itself. It's just part of something else. It's dependent upon something else.
Correct. And apple juice is a derivative of the apple. And a child is a derivative. The Fed and the Treasury would go into quantitative easing. And that was, today, you and I know is called the Greenspan put, that no matter what happens, the Fed and the Treasury will keep the stock market propped up. And that had no idea how desperate they would get, and they're pretty desperate.
They are, and as you've pointed out in your books over and over again, money is an illusion. You mentioned earlier silver is money. This paper currency that we have today in no way, shape, or form is money in the traditional sense.
Well, let let me just say it this way. The real problem is the mantra in people's heads. So the people listening right now, how many of you still believe in going to school, getting a job, working hard, paying taxes, saving money, buying a house, getting out of debt, and investing for the long term in the stock market? That's the problem. You see, why would you save money when they're printing money? Why would you save money when there was ZIRP for a number of years, zero interest rate? Now there's NIRP, and people are still saving money. You got to be crazy. You've got to be crazy.
Mm-hmm.
But no, I'm saving money. I go, are you nuts? And I argue with these people. You know, I've given up arguing. You guys are idiots. You can't even think. They're printing money. Why would you save money? Oh, no, I've got to save money. That's the problem.
You're listening to the voice of Robert Kiyosaki, the author of Rich Dad, Poor Dad, and many, many other books, including his latest entitled Second Chance. A very good book, very well reviewed. Second Chance for Your Money, Your Life, and Our World, where he gets in and talks about the present, the past, and the future on how you can prepare for what lies ahead. Robert?
Every time the government says something, you know you're about to get screwed. So they say income security, retirement income security. I smelled a rat, and my rich dad started talking to me about it, and he says there's a flaw in the system. And the flaw in the system is that the workers put their money into Wall Street, and Wall Street makes trillions off of it. And then in 2016, the baby boomers, the luckiest generation in history, they have to take their 401ks and withdraw by law. So I base my prediction based upon not fiction but facts in the law. So this year, the first baby boomers are required by law at turning 70 and a half. They must start withdrawing. And as you know, the stock market is basically a Ponzi scheme where it needs money coming in to fund money going out. So just do the math. There's approximately 70 million baby boomers, 56 million have 401ks, and they're starting to withdraw this year. So can the market keep going up? They'll have to keep finding new people coming in.